Yep. Hello everyone. Hello. And hi Instagram. Okay, we just need to first make sure that everything is running smoothly. Yeah. So for those of you who can hear me, right, just do me a favor and put it into the comments that you can hear me all right. Yeah, I think everything is good. Everything is good. Okay. Okay. Right, all good. Hi Instagram. Okay, so for those of you who are watching us on Instagram, because we wouldn't be able to show slides on Instagram live, if you're interested in the slides and the content that we have to share, jump over to our Facebook or YouTube. Or it's reconnecting. Then let me talk to the people on Facebook and YouTube. Okay, without further ado, let's get started. So apologies for having to postpone this live session because I was down with COVID for a second time last week. But so don't worry, I'm more than well now, and it gave me an extra week to come up with more content for you guys this time around. So strap in as it's gonna be a long session. All right, let's get started. Okay, so the biggest news since the last time we met was of course the cooling measures, right? I would say this last round of cooling measures, perhaps the closest that we have seen cooling measures being instituted. So once in December last year, then another time in September this year. So it's just a gap of a good 9 months between one another. And so, because it's already been 1 month into the whole cooling measure thing, I won't take this session to dive too deeply into that, and also because I've already done some short videos, as you can see over here, discussing about our thoughts, things to note, some predictions, as well as some of our grievances. You can check them out on like our Facebook or YouTube or even Instagram. So yeah, I won't dive into the details of those cooling measures too much. But now that the shock has passed, right? The shock has subdued, the dust has settled. What I thought you guys may want to hear would be its effects on the market and why I think prices will drop. Now, not drop in the way that a lot of you may expect. So what do I mean by that, right? We're going to dive into that later on. But having a sense of what's happening in the market post-cooling measures, right? I think these two particular articles from the Straits Times dated just October last week gives a pretty good write-up, gives a pretty good sense of what's the thoughts, how are people reacting to all these cooling measures, be buyers and sellers. So the TLDR of the two articles, right? So I've done it for you so that you don't have to do it. So for the first article titled "Rental Market Gone Bananas with Surge in Demand," what do they talk about in that particular article? So rents are increasing, okay, because of an influx of a new category of buyers due to the cooling measures, right, which is the downgraders, because they can't buy a HDB now. They have to serve out a 15 months wait-out period, and extremely awkward number to work with, not 12, not 24, so 15. So you go to the landlords, so nowadays landlords sometimes they will see 15 months wait-up period. But then again, 15 months, then you can offer for a unit, you can put in an option for a unit, then another 3 to 4 months. So all in all, I think the downgraders will have to fork out 24 months worth of rental. You probably have to sign at minimally 18 months lease, if not factoring in some reno, is definitely going to hit 24. So there's a new influx of demand into the rental market, already being sort of having a lot of demand from returning Singaporeans, as was highlighted in the article. There's also a big chunk of expats coming in, and we ourselves, we do sense that, right? Agents on the market, particularly in areas like District 10 and whatnot. And it seems like, having spoken to some of even the HR managers, right? The general sense, especially in terms of either returning Singaporeans or expats, is that they are making themselves scared, because when they land, they talk to their friends, and all their friends start to say, oh my god, the market is very crazy right now, you better hurry up, secure one, if not you will not be able to secure. I mean, that is part and parcel of the whole FOMO mindset, and when prices start to go up, right? Because people scared they miss the boat, and every time you wait, the next thing comes up, it's more expensive. Again, something that has been highlighted in the article. The crazy thing that was said in the article is as part of the offer, right, as part of the a means of tenants trying to secure the deal, right, they offer to put in new aircons for landlords. I mean, that's nuts. I've never heard of that before. I mean, unless you're signing a good 5-year lease. And so we are cutting off from Instagram. So for those of you who are in Instagram, do join us over at YouTube and Facebook, because over there, then we are able to share with you some of the slides. All right. So see you later, folks, on Instagram. All right, back to the topic. So the rental market demand already very, very strong, right? So now with an influx of a new group of demand that is pushing prices up even higher. Okay. Another part of the article, they are talking about how some of the experts don't think the prices will drop so quickly because there's a data lag associated with real estate data, right? Because all the times when we see property price index, when they say the third quarter property price index, for example, is tracking the past 3 months data. So by the time you see it, it's like 3 months late already. Okay, so even with, even if the market were to slow down like today, you're only going to see the data backing that up 3 months later. Right, so that's another thing that they were talking about in the article. And then the second half of the article, you never read like that, because it's basically experts, they interview all the experts, and the experts say, oh, we don't know, right? It's like unsure if the measures will bring down prices, unsure if the market is in a bubble, right? I mean, I don't know I read already, then it's like they're interviewing the professors and whatnot, then this kind of answer, you interview professor to give you a non-answer. Don't worry, I will give you an answer later on. So like I said, I do expect prices to drop, but only in a certain segment, and probably not in a way that you would have expected. Okay. Of course, some of them is suggesting increasing BTO supply to bring down resale prices, quite common sense, okay? The other article, the one titled, Not an Ideal Situation, right, with young couples delaying housing plans, I feel that's probably a better article if you want to have a sense of what different segments are feeling within the market, right? Quite a short article, but covering first-time buyers, sellers, condo upgraders, HDB upgraders, the different sensing over there. So quite a good article, right? But the general sense you get from the article is that plans are being put on hold due to all these changes. And I sort of think that the government putting in the fact that it is temporary is causing this whole wait and see approach to the entire market, because there's a general sense that the people being interviewed in the article is what they are saying, right? Another part of what they are saying is that the sellers are still refusing to budge, and this is expected, especially just 1 month into the whole thing, because most of the sellers in the market are selling their one and only property, number one. Okay, so it's perfectly normal to feel greedy, and it's also perfectly normal to have sort of how do you call that? Let's not call it wishful thinking. I think that's maybe a bit too strong to call it. More so, I think they don't feel it yet that demand is dropping. On the ground, what we are feeling is certain listings are starting to see a drop in inquiries, but that's still going to take time, right, for sellers to sort of realize that, you know what, demand is in fact coming down. If we do want to move forward, we probably got to adjust our pricing. Now, but because of that as well, right, they also highlighted another two parts to it, right? Sellers preferring to put their plans on hold rather than reduce price. And this is something that we do see as well, because a lot of the measures instituted this time around is targeting HDB prices, right? That one I think most of us know, because of the rate of increase in HDB starting to defy fundamentals, right? So that's why the government had to step in. It's also creating a lot of unhappiness in the market because they are still struggling to bring down the wait times for HDB BTOs, right? Forcing all the demand into the HDB resale market. So they have to do something about it. But what isn't really coming down is the prices of the private side, at least not yet, right? The most immediate impact you're going to feel is, of course, with HDB. So now, imagine you are a HDB upgrader, yeah? Yes, you know, the word on the street is demand is dropping. If you're selling, you notice, oh, my viewings last week, 5 viewings, now dropped down to 2 viewings. But the fact is that, right, the unit you want to buy from private, be it a new development or a resale property, that price never move. So if now your offer used to be 750K drop to 700K, right? And that's, let's say that really is impacting your taking 50K out of your purchasing power, right? If you are already stretching to have to reach that property of yours in the upgrade, in all likelihood, a lot of people will put on hold. Why? Because the government go and put the word temporary on this whole cooling measure. So everybody is instead choosing to put their plans on hold. So until the government sort of comes in and starts to say, like, you know what, this is either going to be permanent or we take off, I think the market is going to be in this state of wait and see kind of mood right, generally. The last point is, right, and this one was about the private upgrader the guy is looking at bigger space, so he was either thinking about upgrading to another private property or right sizing over or selling the private and buying a big HDB. Now with that being out of the option, they also don't want to go and rent. I mean, if you are somebody looking to take action, you read this article. Previously, you were thinking about maybe I can go and rent, and you read the article saying now people have to help landlord install aircon. You'll go be like, forget it then I don't want to do that. Let's just wait and see, right? Because government say temporary. Okay, so now this is the two summary of the two articles, right? Very good articles. I would really suggest you go read them to have a sensing of the market. But now, my thoughts, right? What do I sense the market, where the market is at, and what do I expect moving forward, okay? So now with, like I said, right, volumes are going to come down, okay, as people put their plans on hold because the government said things are temporary, okay? So with all the wait and see approach, volumes tend to come down. And when volume comes down, the remaining moves that are done, right? I jump over to point 3, are primarily needs-based moves. Okay, people that need to move because no choice family too big to fit inside the house anymore. Moves for schools, like you know, if you need to get within 1 to 2 km of the primary school that you want to put your kid into. So those are what I term a needs-based move, new kid. Here need to move closer to parents to help look after the kid. All those are needs-based moves. And needs-based moves, right, a lot of the time they are more practical in terms of the pricing, more realistic in terms of their pricing. So imagine this, pre-cooling measures, we have, let's say 100 transactions, out of which let's say 50% is needs-based moves. So those are generally at more realistic pricing. Let's say there's another 50% that is opportunistic moves, right? And this forms, I feel, a good chunk of the market, pre-cooling measures, opportunistic. What do I mean by that? Actually, if you just look in the market, right, 2 to 3 years back, there were a lot of people that were owning slightly older HDBs, and I will put the age at maybe 20 and above years old HDBs, right? Those HDBs, the price never moved for the last 5 years, up to maybe 2020 or 2021. So previously, right, if the price never moved, it's either the owner is sitting on negative sale, or they see that because the price never moved, they just never even think about upgrading. But now that, you know, their prices have moved 50,000, 100,000, 150,000, the idea now start to pop inside their head that, you know what, maybe we can explore all of this. Okay, so this is what I term opportunistic moves. So now, if their prices revert back to the kind of price in, let's say, 2018, thereabouts, right? What they would do, it's maybe now I cannot make a lot from my sale. Then what's the point? Maybe I don't upgrade anymore, right? So those opportunistic moves will come down, which is my point number 4. Right? Some upgrading demand will be removed with the adjustment of HDB prices downwards. Okay. Now, on the supply one, I will talk about that in the next slide, right? So now that, you know, sort of everything is sort of at a standstill because government put temporary, everybody stop. Everybody stop at the you know like the Squid Games, that game, right, with the doll standing at one end of the field, and then so now the whole market is like, right, when the music stop, when the door turn around, everybody pause down there, right? So now everything is at a standstill. So something has to give. So what is going to give? Okay, how I see it, right, is that once HDB BTO wait times start to drop. Okay, again, I'm going to break it down in as simple a way as possible for you guys to understand, right? Always demand and supply. So first of all, understand why did HDB price go up in the last couple of years, right? Because BTO, as a matter of fact, it's not that BTO supply came down, it's that BTO wait times increased. Okay, the supply is actually still the same. As a matter of fact, supply did come up, but it doesn't help the market when supply comes up but the wait time stretches out 6 to 7 to 8 years, because first time home buyers, to them actually time is quite important. They are okay to wait 3 years. If you tell them I wait 3 years, I can make 200k, 250k from a BTO, fine, I wait, right? But now you ask people to wait 6 years, 8 years, a lot of the time they say, oh, then I weigh the time and money, not so worth it, then I go and buy resale. So that's what's happening. The resale market have seen an influx of demand from the group that would previously buy BTO. Okay, so now once BTO wait times drop back down, how I see the market is that chunk of demand in the HDB resale market will revert back to BTO. So HDB resale market supply, right, it will still remain high, as because the opportunistic guys, they haven't seen the impact of demand shifting up, right? So their asking prices will be over here, but once the demand shifts out, that will definitely have to drop. So which is what I meant by HDB prices will come down once BTO wait times comes down, because the demand is shifted away. It's like getting the rug pulled from under you. Then no choice, you play the stacko, right? Forget what's the name, the stacking game, and then you have hit one thing out and then the whole thing comes down. So that's that, right? Once demand gets pulled out and supply is high, so then the price will come down. But once the price start to come down, some of these opportunistic folks will just take their listing out from the market, and then the market will then achieve its new equilibrium, so to speak lah. But in terms of price trends, then of course you were not going to be seeing something like that. You will likely see something like that, or if not, revert back to 1.3 and 2013 and the price trends between 2013 to 2018, 2019 lah, which is actually a slight slope downwards. Okay, and do note, on the supply side for BTO, the government actually is sort of overcompensating for all these delays with a very high number of BTOs coming in, being offered, and all those will sort of hit their MOPs 2030 onwards. So if you follow us, we've shown this chart quite a few times, but from basically this year all the way until 2030, we are going to see an average of 17,500 HDB BTOs every year. But once 2030 onwards, right, that number is going to come up to 20,000, 22,000 thereabouts. I think the figure that HDB did put out is, I think for the next 3 to 4 years, they are willing to put all the way up to 100,000 BTOs. That's like 25,000 per year. Up to 25,000 per year. So that's going to flood the market with a lot of supply. All right. So now, next thing, right? So with HDB resale prices taking a correction and as demand dries up, so some people will be also, because private, later on I will talk a bit more about private. So now with that happening in the HDB market, right, like I said, opportunistic buyers, opportunistic moves may have been removed from the market. Naturally, it's right to assume that, okay, if HDB prices were to come down, private prices should come down as well, because there's sort of a link, right, traditionally, right, there's sort of a link. But do remember that before, right, today you see the prices are moving hand in hand because both are shooting upwards. But for those of you, data nerds like me, property data nerds like me, right, you do remember before COVID happened, HDB prices were going downwards and private prices were going upwards. And once, you know, BTO wait times start to correct itself back to normal, I see that trend happening again. Why? Okay? It's because of this, right? We need to talk about the supply squeeze affecting the private market and how I feel the market is sort of underestimating the impact of this supply squeeze. Why? Right? The fact is that, right, private supply as of now, today, is already very low. For those of you who do follow us, you remember a couple of Facebook Lives back, the number of people staying in private properties, number of households staying in private properties, the number stands at about 290,000, being 21% of 1.39 million residence households. But if you take the 70th decile thereabouts, right, or if you just take the average household income of people staying in 5-room HDBs and executive HDBs, right, their budget is, let me pull out that number. Their budget can go up to $2 million. So the average household income, combined household income of people staying in HDB 5 rooms and executive flats is $13,000 per month. And if they take a max loan, right, their affordability can go up to $2 million. And based on that income, 13,000, right, it falls under close to between the 6th to 7th decile, giving us a number of about 500,000 households. 500,000 households, of which only 291,000 is currently in private. So that's sort of understanding the demand aspects to it. So if you feel that supply is already very low, do understand that it's actually, the fact is that it's low and it's going to be getting even lower, right? Now, the demand is going to come up because remember what we said with HDB, BTO, MOPs going to average 17,500 and pushing above 20,000 after 2030. So demand is continuously strong and the potential for demand is strong as well. Private supply over the last couple of years, later on I'll share a couple of slides, have remained low. So now, on the supply side, right, I've broken it down into 5 categories, okay? So private supply can come from resale, either new or resale, right? But I broke them into even greater subcategories, right? First, how do properties come up as a supply into the market, right? Is number one, when people want to upgrade from their condo for their own stay purposes, right? Most of the time, either for location or for size, okay? The second kind of supply comes in from the resale market of people wanting to exit, wanting to soap up their investments, right? Maybe get a slightly bigger investments. For example, someone like ourselves, when we saw our first investment property in Jurong and swapped it out into a larger investment property over in Park Esta. Okay, so that is one more kind of supply that is being fed into the market. Third are people that just looking to exit their real estate investment to cash out or to sort of consolidate their assets, which is something that we do see quite a bit. For example, a couple that owns 2 properties now want to liquidate both, consolidate their funds to buy a big landed property, or people that are doing away with like right sizes, got one landed and got one condo, maybe just want to sell both to right size to a HDB, or sell both, find a smaller property, don't want to worry so much about the logistics of owning a property. So exiting real estate investments is also forming one part of the market. And then the third and the fifth, the fourth and the fifth one is what we all know lah, right? The new supply comes either in terms of en bloc or GLS. So now, let me explain. I highlighted point 2, point 3, point 4, right? And these are the points that, these are the supply sides, right, that are affected, that will see some impact because of the cooling measures. Okay, let me elaborate on that a little bit more. And also, before I jump into that, let me explain also a little bit on why I do foresee that fog, right? Meaning private prices going up and HDB prices going down, why we will revert back to that sort of phenomenon that we saw in 2013 to 2018, 2019, okay? It's because, think about it, on the HDB side, so if we look at the supply of HDB side, right? On the supply of HDB side, right, most of the time you can only break it down into 2, right? Resale, HDB, or HDB BTO, okay? On the private supply, they both are market-driven kind of, in terms of how the prices over here are determined, right? Resale, market-driven. New, be it en bloc or GLS, also market-driven because they have to do a tender. But on the HDB side, the HDB supply, yes, resale is market-driven, but the HDB BTO is government decided and is subsidized, which is why it's not a fair fight. If the 2 supply comes up, right, most of the demand will then flow over to the subsidized one, the HDB BTO one. Then the resale will suffer a lot. Hence why once the supply is a lot for BTOs, right, resale will get impacted a lot. Another way we can look at it, if you look at the private ones, right, if new one comes up, most of the time the new ones that the government sell is more expensive than the resale one. So more new one come up, actually the resale one benefit. Sort of the opposite way and whatnot, right? But simply put it, private supply prices always continue to look up. HDB supply, extremely competitive, right? And especially with government subsidized BTOs, impact price movements, right? Now let me look at, let me share with you some of the charts okay? So the first chart, right, and why I feel this undersupply squeeze in the private market is sort of, it kind of scares me a little bit because demand is coming up, then private supply is it's continuously and constantly going lower, and why in this round of cooling measures it is going to bring it down even more. Okay, so first chart is of course developer unsold inventory. This will be the new supply. Okay, so now why did I highlight in the previous one that new en bloc supply will be impacted by this round of cooling measures? So en bloc, if you see the numbers, and that is on the last chart, last table, okay? You probably can't see the years. Okay, now I zoom in and you can see, oops. Okay, I zoom in. As you can see, the numbers are already very low from 2019 onwards. Let's try to draw. From 2019 onwards. So by right, if you see the trends, over here, they do have usually a gap of 2 years, 2 to 3 years that you know the numbers are quite low. Okay. So by right, 2021 we should have seen an uptick in terms of en bloc. That was just about going to start. And then the government instituted the December 2021 cooling measures. Why this number dropped from here to here was because of the 2018 cooling measures, where developer ABSD came up from 15% to 30%, right? Then December last year from 30% to 35%. So the developers are feeling the pinch of all these cooling measures much more than us. So now that is already causing some hesitation of the developers to go into the en bloc market. So that is developer demand. Now on the supply side, that has also been stripped off, especially in terms of OCR en blocs. Let me explain why. Because PropNex does have an en bloc team, having spoken to a couple of them, and you know, as well as because they have been doing surveys over some of the potential en blocs, right? The kind of feedback that they gave is that some of the owners are saying, wow, yes lah, my property I go en bloc, yes I do get $2 million maybe, right, on average OCR en blocs maybe $2 to $2.5 million. Sounds like a lot of money, but now if I cannot buy a HDB because of this round of cooling measures, right, because if I cannot buy back a HDB or right size to a HDB, I have to go and buy a condo, for example. That's going to set me back like 1.5, 1.8 million. Then end up I cash out like 700,000. Not to say that it's not a lot of money, but a lot of them then, again, because of the temporary, then just decide to go like, you know what, then maybe let's just see how it goes. Because I approve the en bloc now, I support the en bloc now, en bloc finish, later I come out. Number one, if I have to go and rent, go into that bananas rental market. Number two, have to buy private at a very high price. Again, is it really worth the hassle? A lot of these people retired already, don't want to go through all that hassle. So developer demand for en bloc already low. Now suddenly, those that originally want to go en bloc, now because of this temporary cooling measure, then they also don't want to go for en bloc anymore, which is why I say new en bloc supply is coming down, has been pushed down because of these cooling measures, even more than what is already which is also already low lah. Okay. Developer unsold inventory already on the downward trend. So we are seeing it drop below the levels of which we have last seen right before the trigger of this supply upwards. And I've explained before why the government is trying to hold back this private supply so much. It's because they want to focus their manpower over to the BTO side to try their best to lower that wait time, because if they cannot manage to lower that wait time, we're going to see right? December to September, 9 months. I think in 6 more months, if the price don't come down, we're going to see one more round of cooling measures again. And what are some of the potential cooling measures that can come in place? Not the topic that we want to talk about, but I've talked about it before in our video on cooling measures. Like, you can check out that video if you want to, right? So do I expect this to pick up anytime in the near future? The answer is no, right? Because I know what the government's priority is, all right, and why they are holding back the developers so much, okay? And so this is the GLS numbers. Again, I feel a lot of the times how they publish news about GLS, right? They always say, what, 25% increase on GLS numbers quarter on quarter as compared to the last quarter. Sounds like a lot, but actually if you zoom out, these GLS numbers looks like nothing compared to what it used to be, right? So that number is also very, very low. So what isn't shown inside this these charts, right? It's let me jump back to it. The resale investment and resale exit supply, right? Those we don't really have a chart to it. But just let me share an example with you, a case study with you. Maybe it can help you understand this better. Why I feel the people that are currently holding on to properties from an investment perspective probably don't want to swap it out too much in this market. Number one, for those of them that are holding it for investments, they may hold it back. Number one is because rental is so good, right? Rental good plus interest rate high, a lot of them will then decide to hold on to their current investment properties, because swapping it out enters them into a lot of uncertainty and whatnot. Another thing is, if they have locked in their loans at very, very low interest rates, right, and very, very low deals, right? Just now I was just having lunch with some colleagues. Some of their clients managed to lock in at 1.something%. Some managed to lock in at sub 1%. So if there's any one of you here right now, right, let us know, will you sell your property or not, right? Because you sell already, you buy back into the market, you then suddenly go from 0.something to 3.something. It throws your whole investment analysis, investment numbers out of whack. So because of that, a lot of people are choosing to continue to just hold on to their existing investment properties. People selling out of their investments. Another case study, another example. So imagine this, right? You bought your private property 10 years back, right? Most likely 50% paid down already, or 40% paid down, or pretty good chance fully paid, right? Now, rental is up 20%, right? The figures that were shown in the Rental Market Bananas article. Rentals across the board up 20%, so most of them up more than 20%. So this increase in interest rate actually don't really affect you. For most of them, that increase in rental actually more than covers the increase in interest rates because of their very low LTV, having already paid down a good chunk of their properties. Now, even though prices have come up, would you sell? Knowing also on top of that, today if I sell and I want to buy back, so why the investment one also, my point two, why that is also affected. So only those that will swap out their investments are those that don't have to pay ABSD. If those that need to pay ABSD, there's no way that they will swap out their investment already. They will just keep a hold of it. So now this whole ABSD thing actually is also pushing down, because people looking to exit sell their properties, right? They cannot get it replaced. Right? Rental is so good, fully paid, right? Basically no stress at all, right? It's super hard to go and tell them to sell and do other things, or sell and swap out their properties, because of that 17% ABSD that they have to pay. All right, so ABSD basically is the main thing that's holding back 0.2 and 0.3, sucking that supply out of the market. I hope it's not too chim, but basically the supply coming out into the private market right now is new launch supply, GLS, Lentor Hills, Lentor Modern, and those needs-based supply. Right? So what I see is that the private market is super duper undersupplied. And before we move on to the topic proper, why I chose this topic to talk about is also because of this. Right? In which area is this supply squeeze most prominent? Right? I think you already know the answer lah, because of the title of this Facebook Live. Okay, the CCR. Okay, because the CCR traditionally was the realm of a lot of wealthy investors, right? The fact is that they were stuck with their properties between 2013 after cooling measures, right? From 2013 all the way until 2019, 2020, before we saw resale prices really started to see a pickup from there. Actually, in that good 10 years of the CCR winter, so to speak, right? For crypto talk, for all those who know crypto, right? The CCR winter. They have continuously collected rental, and so they have a reducing break-even price, right? It's the exact scenario that I was telling you about lah. Most likely their loan have already dropped down to maybe 50%, 40%. If they do sell, they will have to pay ABSD, so no matter what is the kind of prices that they're going to get, a lot of them just don't want to sell anymore. So over in the CCR side, right, the supply is super duper low, okay? And then the customers come and say, okay, wow, the supply so low, then how? Go ahead and buy. What are the opportunities? So if we do see resale supply low, then of course, right, new is a pretty good option that you can take a look at. And so I know one of our more popular videos is our videos on reviews of new launches lah. And I know it may be frustrating for quite a lot of you because it does take us a while to shoot those videos. It's a lot of effort involved. So I thought that, you know what, why not I just merge all of this together and just do it one shot, okay? And so let's get started. So for CCR, of course the CCR is made up of, District 9, 10, 11, District 2, District 1, District 2. But today I've decided to focus one episode solely on District 10 CCR launches, but not to worry for those of you that came in thinking or hoping that I review something from District 9, District 11. We'll do that next month, okay? But for those of you who are already itching to buy already and really hope to get some feedback, right? Feel free to drop me a text lah. Happy to have that. Happy to have that call. But don't call me while you're on the way there to put a check. I just had a call like that 2-3 weeks back. Because why? You're already in the mood already, and it's like one foot through the door already. Then it's also a bit hard for me to go and like pull you back, and moral dilemma and everything like that, right? Before you decide on it, if you just have that thought in place, that's the best time to have that chat and to make sure, and when you are more on a more even keel, so to speak. Okay? And so why I'm focusing on District 10 is because District 10 already have a good number of launches for us to talk about. So one episode already cannot say finish. So and I don't want to sort of dilute and just skim past them too quickly. Today's episode just on District 10. So before we get started on that, the launches I've picked were the launches requested by the viewers, right? Some of you texted me to ask me to review some of these projects lah. So which is why we are talking about these projects, right? But first of all, right, some background. District 10, for those of you who don't know, all of us confirm no District 10. But what most of us may not know is just actually how big District 10 is. District 10 is one of the bigger districts. Of course, not District 19 big, but District 10 is actually bigger than much bigger than District 9, right, which is just Orchard, the Orchard area. It's bigger than District 11, Newton Novena. It's also bigger than District 3, Queenstown, Tiong Bahru. So District 10 is quite a bit district, covering, if you look at the Singapore map, right, all the way from Tanglin all the way down to Bukit Timah, stopping only at Upper Bukit Timah. So that's like how long it is. Right? Bukit Timah Road is one of the longest roads in Singapore. And then on the southern side is above, from all the way above Queenstown, right? Then stretching all the way up to Novena, Newton Novena side. So huge area, District 10. So the sub areas within District 10, right, we have Ardmore, right? District 10 is you're gonna hear basically is the most atas of areas already, right? Ardmore, Balmoral, Bukit Timah, Holland Village, Tanglin, okay? And what makes District 10 so popular, so sought after, is because of the prestige factor attached to it, right? You tell anyone you stay District 10, bragging rights, okay? Flex, bragging rights. And then of course, second part is schools. For those of you who follow us and watch us, right, I think it was at our Live at MB review that we sort of coined this term, right, called where there's money, right, money tends to stick within that area, and when there's an area of high affluence, and when people grow up in areas like that, they tend to want to move back into those areas. So then it just sort of creates this little ecosystem over there, and there's and it's another thing to another way to say is that there's only certain areas in Singapore whereby if you ask anybody, it's like if money is out of the question, where would you like to go and stay, right? Couple of areas in Singapore that you will hear people say that kind of thing. One District 10 being one, District 15 East Coast area being another of those areas. Okay, and most likely these names, these road names, these sub areas will come into play. So District 10 really just has that prestige, history, and also accumulated wealth, accumulated affluence. District 10 is also where a lot of the old money is, like generational kind of money, whereby great-great-great-great-grandsons still have the money to spend from their great-great-great-great-grandpa one. Okay? And before we dive into the launches, I thought we could dive a little bit into the price trends of the District 10 area, comparing new and resale price trends, okay? And what is the thing that I take away from these particular trends, okay? So we can see, I've given you the 5-year trend and also the 10-year trend, and let's talk about what's so interesting about these trends and what are the takeaways that we can have. Interesting parts, okay? Notice how in the period of 2018 to 2019, we have seen CCR launches trading consistently above the 3,000 PSF mark, okay? It's not often that you see new launch price trends go like that, whereby they set sort of a high water mark. After that, they then come down to here. Okay, now why is that happening? A lot of the times, the launches over here were snapped up by owner-occupiers paying top dollar to get higher floor. So if you do look into, probably not an excellent example, but one of the best examples I have for this is Avenir over at River Valley. We won't be talking about it today. It's River Valley District 11. The sales chart, right, comes from most expensive to cheapest one, right? So and those were launched. Avenir wasn't launched then, but it's one good example, and that's also a period where we had a lot of ultra luxury launches. Okay. So District 10 set high water mark. After that, prices didn't drop. So note this, when you look at new launch price trends, right, this trend going like that, right, doesn't mean they cut price. It just means the expensive units got sold, then the balance units are trading at this sort of prices. It's not that developer give discount and drop the price. We have hardly seen this happen, not to say never, but hardly seen this happening. Okay, another thing that you want to take a look at is how the gap, right? So with launches over here, doing trading at 3,000, 3x, right? That gap between new and resale is very big, and notice how that gap is now narrowing significantly, right? In some cases, 2008 to 2004. While 2008 to 2004 may sound like a lot, okay? Do also remember, especially in District 10, something very important to take note of is the old supply in District 10 tends to be very, very big in terms of the floor area. Later on, I will show you some examples of this. But it's very, very easy to find 3-bedders in District 10 that were built, let's say, 20 years ago that come in at 2,000, 3,000, 4,000 square feet. And to put things into perspective, you have a 2,000 square feet unit transacting at $2.4 million, also 3-bedroom. Okay, that is going to be $4.8 million. Okay, then you have, yes, 3,000 PSF or maybe 2,008. Let's just say 3,000 PSF. But today, 3,000 PSF at 1,000 square feet, you can get a brand new 3-bedroom, right? So because of the segregation of product, the product segregation in the CCR, especially in District 10, District 11, District 9, simply looking at PSFs is not what I would suggest, right? It may sort of it just doesn't give you the full picture lah. And why this is not so much the case in the OCR, right? It's because in OCR or even in the RCR, a lot of the supply is quite homogeneous throughout. You get a 20-year-old 3-bedder. Yes, it probably would be bigger, but the size difference is not as drastic as what you will see in the CCR and especially District 10, all right? Next up, right, because this one, right, the price I only dragged until 2018, which is sort of the end of the CCR winter. So now let's take a look at the price trends during the CCR winter, right, dragging 10 years back. So once you go 10 years back, right, you can see how interesting the trend starts to look, right? What's interesting about it? Do note the growth rate. Actually, if I push this out now, notice the growth rate below in resale actually beats out the growth rate of the increment in, let me draw that, this part, beats out the growth rate of the increment in the new developments because the high watermark set over here. This high watermark concept very, very interesting, and it's something that you should and can keep in mind if you really want to make your evaluation of new launches or purchases more robust. I think also together with the fact that simply looking at PSS is not sufficient in the CCR area, okay? So, notice last time the gap between new and resale is so narrow. Last time, so narrow. But in what circumstance and why would it be so narrow? I believe would be the low supply of new developments during that. Either an oversupply, I would think so more like an oversupply of new developments during that period. But another thing that you do notice is that the resale trends is very, very healthy and tracks the new trends very, very well. And it's going up sort of independent of the new development price trends. So do note, today you buy a new development, after that you sort of, your data points start to then come down and track the resale prices, okay? That is one thing that I look at. will we reach a point whereby this gap narrows down again? I think it's going to be tough. But probably now it's sort of the closest time we're going to see in this narrowing, because the CCR new supply is still quite a decent amount of CCR new supply for us to choose from lah, and resale is catching up very quickly. The next thing to take note of is that why is this gap so narrow? It's also because the product differentiation for the new and the old is not there. At that point in time, they all still are all built around the same sizes, so it's direct competition. So in that sense, right, once the gap is too big, a lot of the time they will narrow, because if I pick a new one, yes, it's going to be the same size, but if it's going to be so much more expensive, I might as well buy the old one. But right now, that gap is opening up, and will it continue to open up? Probably, but will the resales catch up? I think yes. It's because the product difference is quite a fair bit. Right? The developers can pull the new PSF a lot higher because now they are building smaller and smaller units. The resale one will take a while to catch up, but I feel this resale will catch up pretty quickly once these new ones start to transact in the resale market. So lots of opportunity in the CCR. Something is a very exciting place to be in right now. Probably not so much 1 to 2 years back. But now that the OCR basically has been, the opportunities in the OCR, RCR has been taken up, CCR is another place. But like I said before, okay, it requires a lot more research, a lot more know-how to understand the intricacies involved in investing in the CCR. Yeah. Now, numbers aside, let's jump into projects proper. All right, so 3 things I like. Again, we're going to do this in our sort of trademark style. 3 things we like, 3 things we don't like, okay? We would not touch too much into like the nitty-gritty about the project, right? I'm going to share with you some of the things that I feel is important. So first one, Leedon Green, because highest number of votes to ask us to talk about Leedon Green, right? The former Tulip Garden, where exactly it's along Fairer Road, right? Beside, I think the best landmark I can give you is beside the Leedon lah. Okay, it's a freehold development developed by MCL, of which Elizabeth and I loyal supporters. Both our properties are by MCL, so very big fans of MCL. Good developer, of course I have to say good. I buy from them. Launched in January 2020. So to date, okay, the expected TOP is December 2023. So later part of next year. It's today about 3/4 sold lah, 76% sold. Schools within 1 km. Okay, so like I said, District 10, everybody likes school. So I wouldn't don't play cheat, right? Because it's sort of playing cheat if I say people like District 10 because of schools, and then in the 3 things I like and don't like, I go and put like being schools, and that's sort of cheating you guys off 1 point. So if it's within the distance of a good school, that is like a given. So if not, then I'll put it as a point that I don't like lah, but I would not put it in as a point I like. Sort of assume that there's good schools in the area unless otherwise stated. And so for Leedon, we have a Nanyang Primary, but 2 blocks out of 1 km, okay? So just do take note now, you don't go and buy those 2 blocks and then go and think that you can put your kid into Nanyang Primary. So the 2 blocks that are furthest away from the main entrance are the blocks that are not within 1 km of Nanyang, okay? So like I said, I will not dive into the nitty-gritty layout, how many, where the door is, left and right, whatnot, right? But if you do need that, you can pause this video right now and take a photo. Pause it if you're watching replay. You can't really pause it now because it's a live video. And I'm talking a little bit more so that if you want, you can just take a photo and then scan this QR code. But let me talk about some of the points that I feel is relevant, okay? So 638 units, of which, how are they split up? We have 91 bedders, 310 2-bedders, So the number of two-bedders within Leedon Green alone is probably already bigger than some of the developments in the fairer area already. We have 156 three-bedders, 156 three-bedders. Four-bedders, the number, it's blocked off, but don't worry, let me see whether I can get that out. Four-bedders, we have 48 four-bedders and 34 five-bedders. 48, maybe I write it here, 40, whoa. Yes, 48 four-bedders. Alright, the indicative, so the price range, okay, so this is where it's quite interesting. We do have a very big price range within Leedon itself, with the highest PSF hit of 3081 PSF. That is actually for a 700 square feet two-bedroom, okay. The average PSF there is 2,700 there, so it's almost a 250 PSF difference from the lowest to the highest. All the more surprising considering that it is not a high-rise development. So how the developers stagger this, of course, taking advantage of some blocks being within and some blocks not being within. 1 km of Nanyang as one of the main things. Also, they staggered because Leedon Green is sort of sandwiched between very busy Farrer Road and also the Holland flyover. They have staggered that as well, with the inward facings being priced a lot more expensive, okay? Next part, right, for those of you who do follow us, know how much we pay attention to this. The percentage of Singaporeans within the development, so now standing at 77.4%, not the highest among the new launches that we are taking a look at, but still decent enough to sort of show me that the kind of demand here is organic demand, local demand, not flaky demand, so you do not expect prices to come down, you know, if something happens. Yeah? Another interesting note is 17% of the buyers are registered with HDB addresses. But do note, not necessarily all of them are upgraders. Some of them own a HDB, buy second property, pay the ABSD. Also possible, either that or first-time home buyers currently still staying with parents in a HDB but buy a condo as a first property. That also will be classified as a HDB registered address because this is a purchaser address, okay? Then, so now next up, right, 3 things we like and don't like. The 3 things we like, number 1 is of course the size of the development. It's quite rare to find a unit with this a development with 600 over units freehold in District 10. Not easy to find. So with that, you're going to see a good healthy number of transactions to help push the price upwards. And of course, with that, I put the one below, right? The bonus is that it has very low maintenance fees. I believe the one bedders are coming in at under $300. I think even some of the two bedders are at around $300, which is super affordable considering it is within the CCR. So I think all in all, definitely the size of the development is a big plus to us, right? Number 2, the future en blocs that are coming up within the Farrer Park area. So Spanish Gardens across the road have been trying to go for en bloc quite a lot. Quite a few times already, if I believe correctly. Another one is also Sutton Place that is coming up for en bloc. So there is a good number of slightly older developments in that area. So now why is that a good thing for you? When they go en bloc and when they come up, they're going to set new benchmark prices, and you being sort of the big brother in that area is definitely going to benefit from this. But yes, Spanish Village is also a huge land plot. I think pretty good chance that it's bigger in size. On that note, maybe let me check, since I do have all this. So now Leedon Green's land size is about 35,000 square meters. Spanish Village is, did I manage to find that? Let's see, Spanish Village. Search for that while I grab a drink of water. Yes, oh no, smaller. Spanish Village is 30,000 square meters, so Leedon Green is still going to be the big brother in that area. So benefits of being one of the bigger developments in that area, more units for sale, easier to pop up in people's searches on Property Guru, yada yada yada. Why big is always better. Okay, and especially for the CCR, big is better because they tend to see a lot more smaller developments over there, so it's quite rare to have a big development lah. Okay, so en bloc, right, they will come in, set new benchmark prices, making you look cheaper and also bringing out the sort of attractive aspect of your development lah. Okay, number 3, product offering / lack of supply. So what do I mean by this? So with this, maybe I can go to HProp to share with you guys. So I'm going to just use this example to share with you guys how do I find the kind of prices of the resale properties in the area in an easy way, right? Sort of a cheat code on Property Guru. Actually, a lot of people don't know Property Guru sort of has this function, which is the map function. And when you use the map function, or you can just zoom in, zoom out. And this is excellent for you to find out your competition within the area. So what I did, I zoomed into the Favour Road area. So this is where Leedon Green is, right? So I want to find out, let's say I want to buy a one bedder, right? I want to find out, what are the other one bedders in the resale market looking at. So now let's take a look. So what are the other one bedders in the market asking for right now? And am I paying way higher? So you look at this. In this area, within 1 km of Nanyang Primary, there's only 33 one bedders available in the market right now. And if you go lowest price, the cheapest one is at the Asana at 1 million. But we very quickly come up to 1.19, 1.16, but that is at the Leedon and Poland and Blue. If we add in the filter for freehold and 999, you see that number dropping to just 10 units in the Favour Road area within 1 km of Nanyang Primary, right? So why this is interesting is because think about it. I do sense this potentially happening in the foreseeable future. With CCR, with everything getting more and more expensive, right? It somehow or other may reach a point whereby some people cannot afford to move or to buy a property within 1 km of the school that they want to put the kid in. So if they are creative about it, one thing they can do is to buy an investment property within 1 km. And then just change their address over there, and then to put the kid inside lah. So obviously, technically you have to be staying inside, so you likely cannot rent it out. But you just have to register your address there for 30 months, and then you can utilize the address already, and then use it for address. Then moving forward, pass it down to the next parent that needs something like that. This is something that you see happening in the Balmoral area quite a fair bit, to be honest. Yeah, and your competition over there, other than small developments like the Asana, not cheap, 1.5 million already, because they are 700 and 800 square feet, as you can see. Levels probably being the only other development that has any sort of supply in that area. So very, very low one-bedroom supply over there. Now let's take a look at two bedrooms. And I'm just going to use this because another two developments we're going to talk about is Wilshire and Hyll, which is basically in the same area. So I'm just going to do this exercise once. You get the whole idea of it, and then you get what I mean by I like that they do offer a unique value proposition. So an entry into one bedder in Leedon Green, of which out of the three new developments, only Leedon has one bedders. So pretty good in terms of exit strategy, exit potential, not much competition over there. So two bedders, 19 units to compete with, but their number is going to come up quite a fair bit knowing that Leedon has 300 over two bedders. They only, I believe, just now we were saying only 90 plus one bedders. Right? So if you're looking, right, on that perspective, on that parameter of like when you want to sell, you want lower competition, maybe a one bedder maybe will have a better choice than a two bedder. So this is again how we tend to suggest to clients, right? If you're already stretching your budget to a two bedder, while the normal common sense a suggestion is to still get a two bedder because you think it's easier to sell. This is next level stuff, another level, another layer you can add into your whole evaluation. Right, two bedders, you want to look at the price points, right? Asana 1.34, but once you look past Asana, you're gonna hit 2 million already for two bedders in the area, because two bedder Spanish Village is 1,249 square feet. Leedon Residences is 1,000 square feet, Gallop Gables is 1,184. So remember, that's what I mean by the old stock. The square footage is very, very big. So even though they are calling for, you know, because if you have to enter Leedon Green right now, or actually any of the developments down that stretch, right, you're going to be looking at maybe 2.7 all the way up to 3,000 PSF. But even if you're paying that kind of PSF, the quantum-wise is still going to be lower than the competition in that area. Okay, I think you guys get the idea. So now let's just very quickly look at some of the three bedders. That number is going to jump out even more. So the supply is very, very low because actually Victoria Park, Cornwall, King's Close, all those is all landed already, which is why there's very little supply also. But like I said earlier, right, CCR is undergoing an even more critical supply squeeze because a lot of them don't really want to sell anymore because it's very hard to replace a property like that. So those that you see over here, either they are choosing to exit and just simply cash out from their investments, or their needs-based moves a lot of the time. Actually, once you look at the kind of units over here, you can sort of make more sense of what I was trying to talk about. So you see three bedder from cheapest to most expensive. The cheapest three bedder in the resale market right now down the fairer stretch is $3.65 million. Okay, 3.65 million per square feet, 2,300 PSF. You get the idea. Okay, now coming back to presentation slides. So now that's what I mean, right? Product offering, lack of supply in that area. Okay, next up, three things we don't like. Okay, point number one, the Leedon wildcard. Okay, so now Leedon is a huge mega development above 1,000 units, right beside Leedon Green, and so now this is the biggest discussion and the biggest headache people have when they are looking to enter into actually any of the three developments that we will talk about later on in that area. Hey, Leedon 99 years, even though 99 years, see funny when if it's going to be a 99-year development with all the freehold around the area, they will say, wow, even though how cheap the 99-year is, right, they will have the concern that, wow, because they got all the freehold, how to buy. But now I swap around, I got 99 and then looking to buy in the freehold, they say, hey, got 99 there, I'm very scared. Either way, people scared. But, so yes, right, the Leedon wildcard, because Leedon, another thing about it is that the layouts they have a lot of 1001 layouts, very, very different facings, and so their PSF range is very, very big. If you can see, very, very big. I'll just make it quick so I won't port over to the other side. I'll just say it out. And do note also, the Leedon as a product, their square footage is also very, very big. It was built a good 10 years back. Right? Again, they have 2-bedders. Their 1-bedder is already like, their 1-bedders can go up to 1,700, 1,000 square feet one, right? Smallest 1-bedder, 592 square feet. So yeah, they have very, very different sizes. But because of the size of the development and the layouts of the development, right, you see their range of PSFs are coming from 857 on the low end, all the way up to 2,100 PSF. Okay, so the data being all over the place confuses people, and if you don't have a deep enough analysis understanding of how the market works, you're going to be very fearful. You'll be wondering, oh, next time the Leedon transact, right? The Leedon recent transaction, we have, you know, the range is huge. We have 1,700 all the way to 2,000. Wow, then if I enter today at 2,700, 1,000 PSF differential, would that next time how I sell, right? So that's going to create a lot of fear, a lot of concern onto people lah. Okay. But yet, that it will be something that people will get across, because you do see transactions around the area, like Leedon being over there has not really affected the profitability of the developments around the area. I think that's perhaps the best way I can help you overcome this particular barrier lah, right? But yes, it will take quite a fair bit of research to get across this little issue over there. Okay. Number 2, Favour Road and flyover. So Leedon Green being flanked by 2 busy roads. It's going to be noisy, so that's probably going to be one more objection that you probably might have to face when you are selling your property out in the future. So of course, just something you take note, something to be aware of before you buy into it. Then tough also, because you are then made to decide. Because it's a pretty good, like 200 to 300 PSF differential between outward facing and inward facing. Then do you pay more for the inward facing or outward facing? You pay 300 PSF more next time. Can you make back or not? Again, right? Not easy to handle on your own. You probably have to do a lot of research before being able to make a decision. Okay. Number 3, first of its kind. What do I mean by that? Again, because it's the first of its kind, being a large development, freehold, and then offering unit sizes of what I have mentioned earlier, 1-bedders, 1-bedders at 400 square feet, 2-bedders at 500 square feet, 3-bedders at 900 square feet, this kind of thing, right? There isn't a predecessor. So for the data focused people, right, which is a lot of you live see because you're watching this video, you may find it, wow, I'm the first person to buy this kind, and next time can sell or not? Is there really a demand for it in the resale market? Again, right, put questions into your head, more questions that needs to be answered before you can make a decision, right? So how do I overcome this? How would I suggest you overcome this? It's to see benchmark prices of the RCR, OCR, and is there demand for something around that price being already accepted in those areas? Okay, I leave you to find out the answer on your own. If you need the answer from me, you can check with me as well. Okay, but yes, that is just an issue. So you know what? Basically, is there going to be a resale demand for 900 square feet 3-bedders in the Leedon area moving forward? That's one hurdle that you need to cross. Wilshire Residences right across the road from Leedon, okay? Formerly the Wilshire, right? Also freehold, developed by small project specialist Roxy Pacific, okay? Launched in April 2019, going to TOP middle part of next year, to date about also 3/4 sold. Units are also within 1 km. And for this one, the entire development, I don't need to be overly cautious. The entire development is within 1 km of Nanyang Primary. Okay. Again, if you like more detailed information about Wilshire, can scan the QR, pause this video if you're watching the replay to scan photo, take photo, and it will bring you to the project website and you can find out everything you need over there. But the more relevant ones that I want to point out to you, a much smaller development, okay, just 85 units, of which 11 one-bedders are fully sold. So you can see, if you follow me, you pick up the demand for one-bedders in the area quite high. Why, right? Why people buy? Okay, 2-bedders 55 units, 3-bedders just 11 units, and 4-bedders 8 units. The price range a bit narrower over here, from 2,400 to 2,800, averaging out to 2,600. So do notice also the average is a bit lower than Leedon Green, which sort of makes sense considering it's a smaller development. Okay, percentage ownership, not too different from Leedon Green, more Singaporeans, with 85% being taken up by Singaporeans. HDB address 22.2%, private 77.8%, right? Healthy, local organic demand. 3 things I like, right? So 0.1 and 0.3 sort of a duplicate from the Leedon Green side. So I would not dive into that too much, right? But as we're going to chop up these videos and post it up individually moving forward, for those of you who are watching this as a replay, as a snippet, you can jump over to our Leedon Green video if you want to understand what I mean by me liking the potential for future en blocs in this area, and also the project offering and lack of supply in this area. Okay. So why do I like the layout at Wilshire? Yeah, let me show you. Okay. Oops, press wrong. Ding. I should go to tower view. Right, I will put it out there to say I think Wilshire has my favorite 2-bedroom layouts across the board lah. All right. I got swap or not? Hold on. Oh, never swap. Okay. Yes. Okay, they are 2-bedroom, 904, even the 79, so hold on, let me just see the 732 square feet, 2 bedrooms. So they are 732, 743 to 753 square foot, or even 797, really more or less the same. So I just have to open one for you to see. Can see or not? Let me just double check. I can. Okay, great. So notice I'm starting you guys on the right because I don't know whether we can draw. Yeah, I don't think we can draw on this one. So just follow me, okay? I don't know whether you can see my cursor. As you enter the door, first things first you will notice is that the dining and living is in a landscape style versus a portrait style. Okay, if you get what I mean, right? Landscape, right? So it's long, right? So we always like long, personally, right? We always like long living and dining because number one, it just gives you more windows and bringing in more natural light into the place. The balcony being of this size and being running along the length, you know, if you do it well, open up the glass all the way, it can give you actually very, very comfortable living and dining space, right? As we move in, the kitchen is enclosed, okay, with natural ventilation. This is something you are not going to get even up to 3-bedroom compact. You need to go all the way to 3-bedroom premium over in Leedon Green to see a enclosed kitchen with natural ventilation. So it's an extremely rare thing to find, especially for 2-bedders in that area. Okay, the newer stock. Moving in, right? We have this little guest bedroom, so it's a 2+ study. Our loyal followers will know we are not a fan of 2+ studies, but in this particular instant, I really do like this plus study. First of all, they have full height windows over there, so it can double up as a utility room, store room, and whatnot. Something you're not going to find. So this layout is confirmed beat Leedon Green's layout hands down. Okay. Full height windows, so you get tons of windows in this particular layout. Master bedroom, an L-shaped window. So very, very nice. You lie on your master bedroom, just visualize the views over from the L-shaped window over here. All the toilets are also naturally ventilated. So the layout developed by Roxy Pacific, who are specialists in smaller projects, right? The layout is very, very good. I would not have put a lot of liking into Wilshire had it given crappy layouts. But I'm willing to look past it because I really feel the layout will help it stand out in the resale market quite a fair bit. Okay, so a huge fan of the layouts, very well utilized, and I believe in the resale market they will do well. People will appreciate layouts like that. So the 3 things we don't like, similarly the Leedon wildcard, right? You're going to have to tackle objections, and this one perhaps a little bit more pronounced than Leedon Green, because Leedon Green, the development of its size will do have its organic demand, will be more visible in the resale market. So even though yes, there's the Leedon over there that maybe will transact at 1,800 PSF, give or take, maybe up to 2,000. People, maybe out of curiosity, will still go to Leedon Green, or maybe they know somebody staying in Leedon Green, they know that it's a nice product with excellent facilities and whatnot. We'll still go down and see, because when you sell your property in the resale market, what's important is that people find you and go and view your unit. Okay, if they can't even find you, they don't view your unit, then it's going to be tough. So Wilshire being a smaller development, you're going to face challenges from the Leedon a bit more. So you need to be more creative in terms of your marketing. You need to know where you stand in terms of the product offering in that market and how you're going to exit moving forward. You need to be clearer on that. Okay. Same thing, Favour Road, right? Busy lah. So it's in a small development, so you can't really run away from it unless you choose the units facing Sutton Place. If not, more or less all the units is going to have to deal with the noise from Favour Road. Okay, and so number 3, our pet peeve, the small number of units. Right, so there's going to be not so much transactions lah, and also considering the fact that there's not a lot of 1-bedrooms, those transactions may be pretty slow. Okay, so do factor a sufficient holding period for this. If not, if you do have a shorter holding period, just make sure that you know your entry price is good enough, so that you know you are not buying way over the odds lah. Okay. Hyll On Holland, which is on the So also on the opposite side, right? But you have to cross Holland flyover to get to Hyll On Holland if you are at Leedon Green. So Hyll On Holland will be much further away from the MRT as well. Leedon Green, Wilshire is about 850 meters away from the MRT. Hyll On Holland will be on the other side already. As a matter of fact, maybe I feel on Hyll On Holland, maybe you walk to Holland Village MRT nearer, of which is also not that near. Developer is FEC and Co Brothers. One thing to, so this one is also another en bloc. I just didn't take up the en bloc name for you. I apologize for that, right? It was launched in October 2020. The expected TOP is June 2025. It's about 80% sold already. So the one thing over here to note is that there's no schools within 1 km, right? So you already know what's one of the points I'm going to say for the things that I don't like. Again, right, if you want more detailed information for Hyll On Holland, you can click on the, you can take a photo for this and it will bring you to the project website and you can find out all the information on Hyll On Holland over there. So now on to the 3 things we like and don't like about Hyll On Holland. And sorry, not yet. More relevant information first. Oops, I had to say that because that's going to be the hook for the snippet video. Okay, but anyways, I cannot remember if I said that for Wilshire, but never mind. If we need to, we'll just shoot that again. Hyll On Holland, right, 319 units, so it's in between Leedon Green and Wilshire, of which we have 231 2-bedrooms. So if you're going to add the 2-bedroom supply for Leedon and Hyll together, that's going to bring in close to 500 plus units of 2-bedrooms over there. So thankfully, freehold supply of 2-bedrooms there right now is not overly high. If not, you know, you probably would need to face a bit of competition when you sell further down the road. 3-bedroom supply and 4-bedroom supply not too high at 58 and 30 units respectively. Over here, the range of PSFs is also quite high, all the way from 2004 to 2009, touching very close to 3,000. So they average out to 2,600. So in terms of PSF, average PSF closer to Wilshire, haven't crossed 3,000 over here yet. In Hyll On Holland, we have the highest percentage of Singaporeans and the highest number of HDB purchaser addresses, with 88% being Singaporean purchasers and 30% of them with HDB addresses. Yeah, so that's interesting to note. Why so? Okay, so now moving on to the 3 things we like and don't like proper. The 3 things we like, number 1, it's the quantum. Okay, so Hyll On Holland represents one of the lowest quantums, especially if you have purchased it earlier on when the average prices were 2,400 PSF, 700 square feet. As an entry quantum into District 10, very, very good. And it's also part of the reason why we see so many Singaporeans and so many HDB addresses. So for those of the HDB upgraders that look to take this opportunity to enter into District 10, because now think about it, 2,400 PSF. Lentor Modern, we have had 2-bedroom units transacting at higher PSFs than that already. And Lentor being 99 years and Hyll being freehold, so it's excellent entry quantum, excellent opportunity to get your foot into the District 10 area, which is why even though it's out of 1 km of Nanyang, you do see the transaction volumes being, transaction numbers being very, very healthy. The sell-through rate, as a matter of fact, being higher than that of Leedon and Wilshire, and I boil that down to the very attractive quantums that they have created over at Hyll On Holland. Okay. Number 2, that thing that I like is the layout. Let me see if I can pull that up for you. But it's probably just one of those layouts. Let me see. So FEC is Far East Consortium, just to clarify. It's not Far East Organization. Later on we are talking about one development by Far East Organization. So Far East Consortium is a Hong Kong developer, not to be confused with Far East Organization from Singapore, okay? So one of the projects that they did, TOP I think earlier this year is Atra over at Red Hill. I believe that is their first development over here in Singapore, okay? Now let me see if I can get that really nice 2-bedroom layout for you guys to take a look at. I mean, this layout is also quite nice, as you can see, the 721 square feet 2-bedroom premium. So enter is what we call a dumbbell layout, but do notice that there is a window over here by the entrance, so that's going to naturally ventilate your kitchen. It's an L-shaped kitchen, so very decent countertop space. The master bedroom toilet is naturally ventilated as well. So what they have done over here, they've tried to create, if you can see, if you can zoom in, right, they tried to create every block to be sort of a point block, being just 4 units per block. So they created more blocks in order to allow for a lot more natural ventilation in the development, okay? And it's very, very rare for you to find a portrait. So portrait, again, being living dining side by side, living dining being side by side versus up and down, right? So it's quite rare to find this in dumbbell layouts, especially for 2-bedders. So I really like how squarish and how very little wasted space there is for their 2-bedroom layouts. But there's one other one that I really like, and let me try to find that one. So this one is same thing, also landscape, which is quite good. So for this, the 710 square feet one, right, both toilets have natural ventilation. The kitchen also have natural ventilation, so it's very, very good. But the kitchen countertop, I think, is a bit shorter, especially with the fridge being on the other side. Let me just quickly jump through to it to see whether I can get to that nice 2-bedder for you guys. Or maybe it's the 3-bedder. Let me see whether I can find it. This is more of the regular 2-bedroom layouts, but do note, so again, right, one thing that they have done very well is to put in a lot of windows over here thanks to the point block layout, right, 1 block 4 units layout. So you see the entrance here, you do get windows to help you naturally ventilate the kitchen, and also a lot of the times when we have this kind of open concept units, right, the corridor tend to be a bit dark because when you come in, it's a very narrow corridor, then your open concept kitchen. So a bit sian but here, right, very nice windows, again, naturally ventilated toilets. So nice layouts all around, but can't seem to find the nice. I think that's maybe a 3-bedroom. Let me check. Yeah, so if you can see over here, right, I like it that they have windows at the front and at the back of the unit. So here, and that helps to bring in a lot of natural light into the unit. Yep, I can't seem to find the nice 2-bedroom layouts that I wanted to show you guys, but it's okay. I think you get the idea, It's quite unique layouts, and I like how they have created a lot of landscape style 2-bedroom layouts. So that is also unique to Hyll, but still not as nice as Wilshire. I will still rank Wilshire above Hyll. So now coming back to it. So see layouts, right? I also do like the size of the development, the number of units. 300 plus units would put them, because the rest of the developments over in, especially with Hyll being closer to the Holland side, right? A lot of the Holland developments are a lot smaller, yeah? So with 300 plus units, it's considered one of the bigger guys around there already, and with its very attractive quantum, I believe moving forward, it will bring in quite a fair and quite a healthy number of transactions, okay? So 3 things I don't like I already said, right? It's not within 1 km of any good school. It being a District 10 development, that may, and especially now that it's grouped together with Wilshire and Leedon, it somehow rather makes it like the ugly duckling. I think that's the fairest way I can say it, compared to the 3. But because it's actually closer to the Holland side, and if you compare to the rest of the folks over at the Holland side, they all don't have, are not within 1 km of any schools. So maybe it would be, in the resale market, it would be fairer to compare yourself to those units over there instead of to those units on the Leedon side and on the Farrer Road side, okay? Number 2 is how its balcony is done. So versus how we traditionally will associate balcony doors being sliding. This balcony is, because of the number of units facing the Holland flyover, the development, for lack of a better word, quite strangely decided to do fixed panels and also just one swing door to enter into, glass swing door lah, right, to enter into the balcony. So that removes the ability for you to sort of, I mean, you can still zip track your balcony, but sort of defeats the purpose of, like, you know, or eliminates the ability for you to put zip track and then extend your living area out lah. So that is one thing that I didn't quite understand the need for the developers to do it. Their reason is to reduce the sound pollution lah. But I think on a practical basis, I would have preferred that it was a normal sliding glass. But I think they made up for it with the very nice layout. So I think moving forward, it would not be a deal breaker. It probably will be a deal breaker for some, but it's not like it will make the property unsellable. Number 3, it would be the unit mix. A huge chunk of the units are 2-bedders in this development. So for those of you who do follow us, you do know if there's, hopefully lah, but I think at least a lot of the units are 2-bedders, and hopefully there's a good chunk of owner occupiers inside, and they are not all sold to investors. It would not be so bad, because if there were too many investors in a project, that will bring down the overall break-even point the longer the project is being rented out, and then you may face issues with prices trying to edge upwards lah, due to the lack of due to the ever decreasing break-even price of investors. Okay, so a little bit concerned with the number of 2-bedders, but thankfully the 2-bedder layouts are very owner-occupier friendly. Hopefully the number of owner-occupiers there is good enough to overcome this slight downside. I wouldn't say it's overly terrible with like 70% of the units being 1-bedders, you know. Moving on, so now this is one of the more interesting developments to talk about in the District 10 area, one of the first of its kind as well in the District 10 area, one of the first of its kind mixed-use development in District 10, one of the only, I would say, only, I'm not sure if this is the right thing to say, yeah, but iconic would be the word to say it, right? One Holland Village, developed by FIRE's organization. So this is the Singaporean one, right? It's going to be right smack in the middle of Holland Village. So for those of you who don't know, last time if you go Holland Village, you would park at the car park at the back. Now that has been torn away, and it's going to be replaced by a sprawling mixed-use development with residential, offices, F&B, even service apartments, yeah. So this would be the only 99-year development that we're going to talk about in all the projects that I'm bringing up, the only 99-year one, right? It was launched in November 2019. The expected TOP is end 2024 or Q1 2025. Quite a long runway because it's a huge undertaking. There's lots of things to be done over there. It's already 71% sold. Of course, like I said, right, Holland side, Holland Village side will not have any good schools within 1 km. So if you like more information for One Holland Village, same thing, scan this, drop me a text, and I will send all the e-brochures over to you, okay? So One Holland Village, right, 296 units, okay? But if you do read on some of the websites, they do say the number of units is 500 plus because they have kept about 255 units, if I'm not wrong, 200 plus, 250 thereabouts, for service apartments under the Quincy brand. So in that Quincy Tower, you're going to have some residential, some meant for residential, and some service apartments over there. So interesting style for mixed-use development with even a service apartment as part of it. Personally, I do quite like that whole concept because if a developer is looking to run their own service apartments in an area, they will kind of make sure that the entire development is very well kept, right? Because if not, no one else wants to say service apartment, right? Service apartment, you'll have housekeepers and whatnot, and I think the whole level of upkeep of the development would be a different level compared to, let's say, one without a service apartment, okay? We have 62 one-bedders inside, 145 two-bedders, 79 three-bedders, and 9 4-bedders and just 1 5-bedder. Very, very big 5-bedder at 3,455 square feet. Okay, and then so now this is the interesting part. You see the price range, okay? They have from 2,300 all the way up to 3,400. Averaging out into 2,700. So this project by Far East are known to be very, very aggressive with their pricing, really daring to sort of price themselves out there, so to speak. So interesting thing, right? Buyer profile, right? You would think, wow, Holland Village, Far East, wow, this kind of price, wow, is it all the right 3,400 PSF, 99 years development, not even near the CBD, right? Holland Village. Yes, Holland Village is good, but you know what? 3,500, 400 PSF Holland Village. Some more no good school in the vicinity, right? Who are the buyers? Here are they. 82% Singaporean, right? 9.4% PRs and only 8.3% foreigners. So this is a percentage not too different from the percentages that we saw in the previous units, right? In the previous developments, Leedon Green, Wilshire, Hyll, okay? With 14% HDB and 86% private. So this one, more private addresses for this. So what are the 3 things we like and don't quite like about One Holland Village Residences? Okay, the 3 things we like. Number 1, the location. So of course, if you ask me, money aside, would I want to stay there? I mean, I'm not a Bukit Timah person, but I think if you ask anyone that went to school around there, ACS I don't know, SGS MGS would they want to stay? I think it's an area that has a lot of nostalgia to it. Of course, also very, very, even though it's an atas area, they offer a very good variety of F&B options. They have wet market, they have hawker center, and then they also have atas food. So I think as a location, very bustling, very convenient, MRT station right there. So yeah, I think it's as good as it gets in terms of convenience and amenities, right? Number 2, organic demand. So, like I said, right, It's an area that a lot of the affluent people grew up in. And a lot of the people that used to go to school in that area will hang out in Holland Village. So it's a place with a lot of nostalgia, fond memories. So if the product is executed well, I think and I feel people will want to go and stay there lah. They will want to go and stay there. And the alumni for those schools, it's not like I'm elitist or what. It's because I know that area a lot of old money, right? And then if they are not the Asiakia and they continue to study hard and get good jobs, their pay will also be quite high. And then they can afford to come in and buy back in this area. So organic demand, right? Old, rich, nostalgia, everything add together to bring a lot of demand into that area. Number 3 would be iconic. It's going to be one of the tallest buildings in the whole district 10. Okay, it's really, really good height. So it's going to stand out from miles and miles away. So everybody that goes to school there, that's going to continue to go to Holland Village, they're going to know, oh, that's one Holland Village. And if you go to school, you see, you know, a lot of the times you'll tell yourself, wow, if when I grow up, I want to stay there. If you see, wow, the family take the lift down, come walk around. If you visit your friend who stays there, wow, and then you have drinks at Alibaba, have drinks, and then just walk home. It's going to be iconic, right? Organic demand. So actually all my 3 points really just add together to say that I feel this is really a unique product that, you know what, people may pay. Number 1, they may pay. Number 2, they can't afford to pay the kind of prices that Far East is going to charge you, and then you may potentially have to charge someone else when you have to resell it out in the future. Probably closer to the average PSF part to things the 2006, maybe sub 2006. You know, less than 3,000, but not the 3,004 lah, PSF range. Okay. The 3 things we don't like, right? So number 1, District 10, if no schools, you know, not the biggest fan to things. Probably gonna, it just basically eliminates out the group that wants to buy to put their kids into the school lah. Okay. Number 2, the number of units. And I'm comparing this to, let's say, Canning Hill Piers lah. So Canning Hill Piers, 99 years mixed-use development / integrated development, albeit not in the CCR, right? Sort of some similar, same but different kind of product. Bustling area, party, convenience, but the one is much bigger. So the one will have a lot more transactions moving. This one just 296, and at freehold prices, or even more expensive than freehold prices. Probably not the best if you're looking for a short flip, okay? But if you're willing to take a bet, willing to take a gamble, or you are buying for own stay, then that shouldn't really affect you too much, okay? Number 3, of course, is the price, and when I say price, I'm seeing the 3,400 PSF kind of price tag. If you want to make a profit, you're going to have to sell at 3.6. But that said, if there's anyone or any product that can sort of justify this kind of price, leasehold aside, would be something right smack in the middle of that one place that everybody in District 10 knows about, that's going to go to, that's going to see. Anybody that studies in District 10 is going to know, it's going to see, right? Versus yeah, it's probably going to be even more prominent than Leedon, right? Because it's there, it's the heart. Holland Village is the heartbeat of District 10, especially if you stay in the Bukit Timah area, Holland, Fairer areas, that's the heartbeat. So yeah, right, even though the price is high, if there's a product that can sort of justify that, I believe it will be One Holland Village. Next up will be, and I think this would be our last project, right? So we are traveling down to Bukit Timah Road and talking about Perfect 10, right? Developed by Cheong Kong, Lee Ka-shing, right? Maybe a more familiar name to all of you, right? Very nice address, right? 321 Bukit Timah Road. So it's freehold in tenure. it was launched. Oh, I forgot to fill this in. It was launched, and don't worry, let me give you guys the answer. It was launched in December last year, December 2021. Okay, expect to TOP in November 2026. Right, to date it's about 67% sold, and it's within 1 km of ACS Primary and SCGS. Right, two very, very sought after primary schools lah, huh? And it's, again, right, if you need the more detailed information about the project's floor plans, facilities, etc., right? Pause the video, scan this, and that will bring you to the project website where you can find everything that you need, even virtual tours and whatnot. All right, so Perfect 10, 230 units, of which just 2 one bidders, right? 136 3 bidders, and 136 2 bidders, and 92 3 bidders. The indicative price range, again, this one has quite a big range, and that's because Perfect 10 is a higher rise development than Wilshire, Leedon, and Hyll. Okay, let me see how high does it go to. I believe it's at least 20 something floor. I think it's 24 floors, PSF highest, PSF 24, thereabouts. Yeah, but a huge range of prices are 2,600 all the way up to 3,500 PSF, averaging out to 2,900 PSF, okay? So over here, 77% Singaporeans, 10% PRs, 11% foreigners. Still a very healthy number, okay? 14% HDB addresses, 85%. So over here, it's a little bit more private buyers and not as high in terms of percentage Singaporean ownership, but still very, very decent at 70-something%. Huh? So now the 3 things we like and don't quite like about Perfect 10. The 3 things we like: the layout. I'm a huge fan of the layout for the 3 bidders. Let me just very quickly show you. Huge fan of the 3 bidder layouts. So have you seen a development with 1 unit, 2 private lifts? Of course, people will complain that it's excessive, but if you're paying this kind of price, excessive is what you are probably looking for. So now let me show you. Okay, so you enter into one of your 2 private lifts into your own little private lift lobby, and if you pick a high enough floor, a lot of the times private lift lobby, no windows one, walls side by side. But this one, you step out into a private lift lobby with a full height glass window, so it's quite impressive, especially if you pick the higher floor. But even if you're lower floors, this lift lobby facings is actually still pretty nice, pretty impressive. As a layout of the development as a whole, if you can see over here, the architects are DP architects, so very, very good architects. And of course, a Hong Kong developer, Lee Ka-shing, they see a lot of feng shui. So how the development is laid out is actually very, very nice. If you need more details, right, you can go and scan the QR code and go into the project website and click around and see. But huge fan of because a huge, very long pool. The units are quite a good distance. I believe it's 80 to 100 meters away from Bukit Timah Road, so you're not going to be too much affected by the noise lah. Right? Okay. Then you see the layout. I give them credit lah. They didn't, even because they are Hong Kong, so maybe this is quite a regular layout in Hong Kong, but you know what, they didn't sort of do a copy and paste cookie cutter 3 bidder layout into this. As you step in, While visually you see this is a very standard portrait layout, and it looks a bit awkward, like a bit of a small dining area. You need to go see the project on your own, because do remember this is 1,281 square feet. The other one is slightly smaller, but it's laid out the same 1,227 square feet. So kitchen all tucked away onto one side, right, as you enter. A full sliding glass, very, very clever design, because that gives you a very wide perspective if you tuck in all the sliding glass. Not a cheap sort of thing for the developer to provide, but they did provide it, which is, I think, a very nice touch. Kitchen, not overly big, right, yet naturally ventilated. They have also very cleverly utilized this. So for units with a private lift, they always have a back door in case your private lift spoil. Usually they need to provide that because it's only one private lift, but now got two private lifts, so chances of you using this back door is very, very low. So if you do close it, then this entire area is sort of your storeroom and utility area. The bedrooms are all tucked away at one side. Nothing much to shout about for the two bedrooms, but the master bedroom, again, I don't think the layout over here sort of does it justice. But what they have done is, once you enter, the entire side with the cupboard, I think, but at least what you can see is there's plenty of wardrobe space for the master bedroom. But that is just one thing. You do also notice all that size around this space. What they have done, right, is the side with all the cupboards is going to be one full feature wall, so with floor to ceiling storage, and even the toilet door that's in the middle of that wardrobe is going to be concealed within, using the same material, same finishing as the entire wardrobe. So if you stand at the bed and look there, it's just very nicely designed wall finish. I don't know why, I just found it very, very nice lah. Quite old school, that they provide you with a bathtub lah. But yeah, the layout like that, not very impressive. So do swing by the show flat. I would say it's very, very nice. Now, coming back to this, so right, one of the things I really like is the layout of the unit, layout for the entire development, how the development is at the back and further away, close to 80 meters from the front of the road, giving you that long driveway. If you really have to drop off, and it's impressive lah. I think, like they say I don't know, I hear a long time ago, but they were saying how expensive your house, how grand is your house, right? Is the distance from your front door to your house. It's something that is more common in the US, where they have a very, very long driveways. But I guess that works for Singapore as well, right? You make people wait before they see the grand entrance of your house. Number 2, entry quantum. So you may be smacking me saying, are you sure? And this kind of entry quantum is it's something that you like. So why I say that? Okay, because you need to look at the entry quantums if you want to enter into the Bukit Timah Road belt, right? Give you a perspective. So Bukit Timah Road, right, we have Perfect 10. So on our left, it's Hyll Residences. They are 3-bedder. They don't have 2-bedders. So anything less than 3 million, actually you cannot enter into this stretch in Bukit Timah Road, okay? There are 3-bedders, it's 1,000. Hyll Residences are 1,841 square feet. So even that at 2,000 PSF is going to fetch us, have an asking price of 3.6 million, which is about the same as what we are looking at over at Perfect 10. Wing on Life Garden, no 3-bedder, only 4-bedder, and the size is 3,240 square feet. Next door, even bigger, Honolulu Towers, 5,000 square feet, only 4-bedders. So how cheap the PSF, the quantum is still going to be much, much higher than what we are looking at over at Perfect 10. So I think it's one of the first guys that is offering the newer age products down the Bukit Timah stretch. So it's something really worthwhile taking a look at, because of its proximity to the two schools. Again, that's not one of the points I've written here because I assume D10 you do have this, right? So now we have two, and somehow it covers both the genders, male and female, SCGS and the boys' school. So this $3.5 million to $3.8 million 3-bedder to enter yourself into a 3-bedder in the Bukit Timah belt is a good entry quantum. 2.2 million 2-bedder is 2.2 to 2.5 million dollar 2-bedder, right? I mean, we are talking about the Bukit Timah stretch, okay? Not talking about mass market, right? That kind of quantum, it's good because in that area, alternatives not that much. Because 2-bedder, the other development that is offering a lot of supply would be Cyan. I think that's how you pronounce it, CYAN, right? But even that, there's not many units there for sale, okay? And their units are at 980 square feet, asking or transacted at 2.2 kPSF, so that quantum is also very, very big. So at your entry quantum now into a new development, not a lot of competition. So moving forward, selling shouldn't be too hard as well, okay? And next thing, if you go and analyze the transaction data, this kind of quantums is transacting very, very healthily over there. So that's another thing that I have not put it inside here, okay? So entry quantum and entry price. So entry price, the reason being there's a lot of floor loading happening in Perfect 10. I think it's about 20K per floor. So if you're still quite budget conscious, you can enter in a slightly lower floor units at a lower PSF and have the higher floor units sort of pull out the price for you. So which is why we see that huge range in PSFs because it's high and low floor. But there are still people buying the high floor units, right? And if you're paying that kind of PSF for high floor units, you know very well that they are own stay folks, right? And so if you wear the contrarian hat, you want to be an owner-occupier, you want to be an investor in a very owner-occupier heavy area, right? That helps you in terms of your whole break-even game plan for your exit strategy, okay? So now onto the three things we probably don't quite like would be the lack of 4-bedders, right? Because 4-bedders would mean that there will be owner-occupiers, so bringing in a higher number of owner-occupiers. And those will be a lot more family orientated. So us being 2 and 3-bedders, so for those of you who are looking for a very family area, I don't know whether you will get that with Perfect 10, but of course, if you start to see the sales charts coming up from top to bottom, you probably will then expect to see a lot of more owner occupiers over there. But family centric, maybe not so much, okay, because of the lack of 4-bedders. But even then, I feel the development made a good move over here because 4-bedder, then you're going to have to compete with a lot of the other 4-bedder supply in that area. So they've decided to sort of focus on this particular product offering that doesn't really have a lot of competition over there, okay? But so for those of you who are looking to buy, who need 4 bedrooms, no choice, you have to go to Wing on Live or maybe somewhere other units further down. I think Balmoral side should have a few. So they are not. So we're not going to have options available for you over at Perfect 10. Number 2 will be the long TOP, right, all the way until 2026. If you're buying it for investment, good. This will sort of shield you from the high interest rates environment all the way until 2026. By the time we do feel that the interest rates most likely will be reverted back to normal. And those of you that have to sell to rent while waiting for this to TOP, then you got to factor in quite a fair bit in terms of the rental being paid. Then number 3, thing that we don't like is the distance to MRT because Perfect 10 is sort of in between the 2 MRTs. I think it's 2 bus stops over to either Stevens or Newton, either Stevens or Newton, right? So it would be a bit of a walk if you have to walk, and they don't offer shuttle bus. So if you want, you have to take a bus stop, but I think pretty good chance the folks staying here will drive. Now, on to how would I rank this new launches over in the CCR, okay? And I think it would be too simplistic to just rank them outright what is 1, 2, 3, because of course there's a lot of different factors involved in them. So pardon the typo for Wilshire. It's Wilshire. I accidentally added in an extra H. So if you're asking me in terms of layouts, which ones do I like that jump out to me? The top 3 for layouts would be Wilshire, like I said, Perfect 10, followed by, I would say it's, I forgot to slash, but I would put in terms of number 3, either One Holland Village or Hyll On Holland. Those being my top 3 choices in terms of layouts. And in terms of location, number 1 would be Leedon Green and Wilshire, followed by One Holland Village. These are like top 3 It's not that one is higher than another, because they all have their own pros and cons okay? And I don't think it's very useful to really rank 1, 2, and 3, because location again is a very, very personalized sort of thing. But I will at the very least rank my top 3 for you guys, okay? Next would be One Holland Village. Like it's an area that I would want to stay, right? Super duper convenient, F&B, MRT, cheap eats, good, nice eats, fancier eats, everything right at your doorstep, okay? Only no cinema, yeah. Cinema, you have to go to Orchard, but you know what, that's only going to be 10 minutes away. And then Perfect 10 for the location, not so much in terms of convenience or amenities, but more so because it covers 2 good schools within 1 km, okay? So now, how would I rank them in terms of investment potential and exit strategy? On that note, right, you got to text me for that, right? I do have in mind, because it's going to be a lot because you have to compare 1 bedder, 2 bedder, 3 bedder, 4 bedder. It kind of depends on which one you want, and I'm trying to keep this. If not, Elizabeth will kill me. If not, I will have to stretch to 3+ hours already for Facebook Live. But if that is what you would want to know, I make things easier for you guys. I let you scan the QR code now, and you can WhatsApp me. Okay? Next thing, if you want to know how to compare, so now how you rank is one thing. Similarly, then how do you compare if you are looking at a new development in District 10, in the CCR, or anywhere? You want to know how do you rank them on an apple-to-apple basis? That's something that you need to know. We can help, okay? And do these new launches fit into your plans, right? And how would I rank them if for you, okay? So of course, I would need to ask you certain questions like investment horizon, different exit strategies, contingency plans, whatnot. Then I can help you with that. Okay. So if you like some help with that, and you would like me to ask you the right questions, ask you the difficult questions in the event you're missing out some things, again, scan the QR code, drop me a text. Happy to help out. And same thing, some of the bonuses for those of you who don't already have either the Contrarian Property Guide or under the radar, underappreciated CCR properties, same thing, drop me a text, happy to share. And for this time around, before I go, right, so how we plan is important that you start off from the inside, the why, how, what. Today we are focusing a lot on the what. Right, and sometimes, and especially in this environment, a lot of people struggle to make a decision, struggle to move on to the next step. Is because they actually come from the outside in. We do recommend working from the inside out, understanding first why you're doing this. Secondly, how do you compare the properties? You need to have your evaluation criteria before you start looking at properties. If not, it will get you confused, and also you fall into the trap of either FOMO or reverse justifying to yourself to buy a particular property because you are just emotionally attached to it, got excited about it, thinks it's nice, okay? And lastly, before I go, perhaps can share with you guys one of the case studies of what we have helped one of our clients execute, or one of the interesting things that we managed to secure for our clients, okay? So I'm going to start you with the bottom right table, bottom right box. Bottom right box. So this was our client's purchase, right, at 2.7K PSF for a 3-bedder, right? Purchased it in August this year. So they purchased this because we did have a high watermark of a same unit in the development, just a couple of floors higher, already entering at 3,100 PSF. So we saw this excellent opportunity for them, and then thankfully and luckily we were able to make the decision quickly, because there weren't many units that offer this kind of value propositions. I mean, good deals don't exist out there for a long time, which is why we say it's necessary to go through that planning of the why, the how, the what, and before you start searching, because once you go through that process properly, you see the right deal, you know how to see the right deal, you know how to spot the right deals, and then you can execute them quickly. We did that. So thankful. Then today, another unit was sold later on, right? So we bought in August. In October, the price have already picked up. So in essence, we did what everybody is hoping to do, to catch it at the base, right? Opportunities like that still available in the market? There is, but first of all, you need to know how to spot them, right? If it is something that interests you, drop us a text, right? Scan the QR code, or just text us lah, and we'll be happy to help. If not, I've come to the end of another long session. Do we have anyone with any questions? Elizabeth, do we have anyone with any questions? Let's see. Do we have anyone with any? Yes. Takana appreciate the effort, but can be more concise, less long-winded. Sorry lah. Yeah, I know people tell me I'm a bit long-winded. Will we be talking about perfect 10? Oh yes, right. I've done that. Can't see the layout. Sorry, but hopefully I got that fixed, right? But yeah, I will try to be a bit more concise. Sorry. And on Facebook, any questions on Facebook? Let me see. Oh, Nia Singh, continue, right? Not quite sure what you're asking, Nia Singh. If you're still here, you can elaborate a bit further. Probably not, because there's only two guys left on Facebook. If not, thank you so much for joining us, and we will see you next month, where we will talk about the other launches in the CCR right outside of District 10. Right? If not, thank you so much for joining us. Till next time. Bye bye. Yep, done.